Here is your Bull and Bear stock of the week. An auto parts company and a pet pharmacy. Wow, that's an interesting one. Are the Bull and Bear this week? Bill Wilton, our stock strategist, here with us to explain why. The auto parts company is Standard Motor Products. SMP, the ticker symbol. So what makes this a bull?
Well, one thing that we really like about them is they do avoid the typical cyclical nature of the auto industry, which you might not imagine. But when you think about it, because they focus on the aftermarket parts, the average age of cars is getting older and older. So we're needing more and more replacement parts. They're also growing through acquisitions as well as organically, which is definitely what you want to see. They're able to use their cash and financial leverage to buy up some other companies at this time in the cycle, which is a great time. They're also a good value with solid growth rates moving forward. Just all in all, a solid company. They do have a little bit of concentration risk as far as their customers go, but these guys are so big, they're really not going anywhere.
All in all, they're even upgrading their existing product line, I understand, with new products.
Yeah, that's one thing. They're always innovating new brands, new products as well, and mainly because we're seeing cars get more and more advanced. So it's great to see a company like this keep up with the times, if you will. But more than that, they're actually on the leading edge of it.
All right. PetMed Express is that pet pharmacy that I mentioned. PETS, the ticker symbol on the NASDAQ. Now, we've talked about this one in here on Bull and Bear before. But what's going on with this company right now?
Well, we used to like them here, but, the bottom line is their earnings estimates are falling. They're expected to see a earnings per share contraction this year. Their forecasts for next year are still below where they were at last year. So it's going to be a tough 2 years for them. They just missed earnings expectations in their most recent quarter, coming in at 19 cents versus 22 cents. So even without looking at the macro, economic factors that are going into it, the bottom line is they're just disappointing investors, and they're not expected to be growing, at least in the near future here. They're seeing their average orders slide. Their repeat customers are falling off as well. The number of new customers that they get per quarter has been declining, and that leads to a margin hit because they're having to give out so many promotional offers to get new customers, just trying to tread water there. So you've got less customers at a lower margin. It's just not a very good growth environment. That's why they're at a Zacks number 4 right now, because of those earnings misses and falling estimates.
Interesting. Do they have competition?
Yeah, I mean, that's one of the other things that's tough about it. People aren't really brand loyal to their pets' medications. They do both prescription and non-prescription. It's about a 2/3 to a third mix. So they do a good amount of both, but when it comes to Fido and he needs his pills, I don't think many people are going to be opting for the brand name and spending the extra dollars. If they can get it for a buck cheaper next door, they're going to go over there. So that also leads to that lower margin.
Interesting. Do you own either of these two?
I do not.
All right. Well, we do the Bull and Bear of the day in text form on our website, and you can access that through our homepage, Zacks.com. If you haven't seen the two stocks, we post one bull, one bear each business day for you. There's a little bull icon next to the bull and a little bear icon next to the bear on Zacks.com's homepage to help you identify those stocks. With Bill Wilton, I'm Terry Ruffalo.